Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome back to the video. In this one, it's been a full week and we have now gone through the candle-by-candle psychology with a twist. If you remember last week Monday, we posted a video going over the candle-by-candle, but taking it a step further and looking at how we can use that to our advantage, what that information is telling us, and now we can go back and we can review how did that information work, how did everything go, and then kind of gauge what is likely to happen for the next one. So if we swing back a little bit and we look at what happened on the last one, we can see that in the end we had those two sell zones that stacked up really nicely with risk characterized above the highs, and those worked out beautifully down to the bottom objective. The next zone of interest was the potential swing long for the bigger move, which did get a nice bounce, but eventually ended up failing, stopping out and breaking through the opposite direction. So one really nice opportunity for shorts and one failed opportunity for the longs. And of course, if we go a little bit beyond that now and look at where we are, that worked out nicely, but what's changed, right? Has anything changed? Are we in the same situation? How have things progressed since then? And if we look at it, remember we were talking about how there is such a strong anticipation of selling pressure up here to keep this going, but the bulls are going to want to buy it at the lows. That's their swing area based on the bigger picture. And if we look back historically, we had this really nice rally up, wave 1, wave 2, wave 3, wave 4, whoa, they crashed way farther down than what they really wanted to, and realistically, that progressively starts it from the other side. Wave 1, wave 2, wave 3, wave 4, and now we've got a wave 5 completion. After that wave 5 completion, it's much more likely that the market begins to transition sideways and potentially still slightly down. So with that mindset intact, if we're looking at what's happening so far, the trend in and of itself is it's so shallow it won't even let me draw it. The trend in and of itself is kind of at the bottom of a major zone of support. And if the market's going to hold this as a structural area, then realistically we're a mile and a half away from any kind of resistance. So from a swing perspective, this is a much nicer zone of potential support if we're looking to continue this further forward. And let's bump this to here so we can see a bit more of the picture. And we're going to zoom out to a 15-minute. We actually might not have to. Just looking at the overall back and forth that we've got going on, I think it's fairly obvious that one thing is for certain. We've got this really, really strong support level that the market came crashing down to, and we've now broken down underneath it. So what I want to see is when we're opening up today, you'll notice that we opened up with a small gap down, and we're kind of clearing into a sort of oddball continuation, lack of a gap fill, big spike to the downside all the way lower. So if we characterize what's been going on, we had an inside gap down that took everything back from Friday, basically. Everything that they tried to do on that Friday was completely wiped out on Monday. So from the larger perspective then, we have to ask ourselves, well, wait a minute, what were these traders doing? From the bottom to the top, were they holding in? Were they long? Were they short? What was going on? And it seems like the majority of them had their averages back at the 43.21s. Now, the market did fail all the way back up, rotated above a previous swing, but couldn't crack the major swing, and then rolled all the way back down to a new low. So we have a trend continuation that's getting a little bit more sideways, and that makes sense. So with this inside gap down and a really, really hard continuation lower, what I would like to see is for this bearishness to finally find a potential bottom. And we're not going to really see that until we get above 42.88. But what I would really like to see, given that we started off with the inside gap down, and remember, take this one candle at a time. We started off with an inside gap down. The bulls got nothing done. The bears start turning down, strong breakdown. The bulls start running for the hills inside this wick like, oh no, get me out. I was wrong, please. Rolls all the way back down, pummels down. Now, a lot of longs will be looking at this next area right back at the POC like, yes, this is the spot. And they got crushed. Right? A little bit of support there, but not even a chance for them to get out of break even. So realistically, before anything happens, even if we do get above the intermediary POC at 42.88, it's much more likely that we come back to that 43.21 area, pull back to maybe a higher low, and then rotate back up from there or break down from there. And that's going to be the big question. Right now, as long as we're underneath 42.88, I have to assume that the sellers are in control to a scalper's degree, which means that if I'm going to be looking for a continuation, it makes much more sense that scalpers are going to be looking for a pulse back down to the lows, probably something along the lines of, let's take it from a scalper's perspective, get back into that POC up here, and pop that into the highs. So if the market can rally back up into that previous POC, 43.21 is the zone of interest to try to press back down for that higher low. And that fits using that current POC. Now, assuming we can get that, right? That would be a continuation, whoops, up to this point, and then moving down to the next, right? Then bulls will be looking for a continuation long with stops underneath the lows. And that probability fits a 3-to-1. Man, I really wish that'd be just a little lower so we can get it inside that gap fill. So right here, we fit a 3-to-1. Technically speaking, the zone of interest would be here, but that would only be a 2-to-1 because it doesn't fit. So we would have to go this. There we go. So as far as upside continuation, again, this is after that, then the longs will be looking for a continuation phase to the upside. Now, if the market just goes screaming through here, never pulls back and starts rallying back up to the top, it's very likely that we see some form of an ABCD corrective phase, which is very usually the case once we've completed 5 waves. And if that is the case, that will put very top-weighted resistance for sellers to try to pressure back down for 3-to-1s back to the POC. So if the market can rally a little bit further up here, that creates a very big pocket of resistance at 43.56 to try to pressure back down from. And really, you know, breaking this down from what's going on internally, we started off the day with that small little inside gap down and all of that weakness. I think everything really started from there. Because really, once we have that, they couldn't even close above the lower swing. Everything was wrong with that zone. And we start showing a pretty weak bear bar, albeit. Strong bear bar confirms it, and then it's just sliding off the edge of a cliff. All these wicks that are on the top, those are kind of them reaching their hands out. Like, please grab my hand, don't let me slide, I'm falling. And then they come crashing down as soon as they hit the ground. This is what you would consider a dead cat bounce. It's not really going to get anything done. It'll just bounce there before failing and rotating back down once again. So with that small balance point working its way down, we can kind of see where did all the volume come in before that whole drive down happened, right? We know all the volume is down here now, but before that actually took place, there was a lot of volume right there, and that could easily be longs trying to buy on a dip, looking for a continuation phase back up. And that would make some pretty good sense if we zoom out a little bit and look for what they were trying to accomplish. That'd be nothing more than basically just a higher low continuation. It fits the bill. It didn't work, but it fits the bill. Now, noting that, we have shifted the POC to the downside. So with the POC shifting lower, this move lower tells us that if the market does rally up, it would make a lot of sense for that to be an internal target. So all of these areas start kind of making sense. If we look for a little bit of a higher move, this is exactly where all the longs are going to be taking their first profit area, and this is also where sellers are going to be looking for a continuation down for a scalp. If it works its way through that and invalidates those initial sellers, then the swing sellers are next very much near the high, so they can reduce their risk for a rotation back down. If we do get that higher low transition, the longs will be looking for that continuation phase in the opposite direction to try to get this going for a swing back to the upside, to try to complete at least back into the 43.40s to 30s, but there is a potential for a lot more room to the upside. Remember, the overall trend at the moment is still technically down. It may not be the nicest looking thing in the world, but it is still technically down. So it's wide. Make sure to be on the lows or the highs and stay out of the middle. That's where things get a little bit dangerous. So that's going to do it for this one. Very interesting how last week played out where we were kind of 1-1. Now this week we're going into a couple different setups that are potentially happening. We just have to wait for the market to show us what they want to do, and then we can come in the week after and see how it all follows up. That's going to do it for this one, though. Hopefully you find these useful and interesting and just kind of an inside look as to what's going on in the overall market structure and what traders are kind of thinking. These don't have to be crazy long. Yes, you can go candle by candle by candle, and some will go through that when there's more areas of interest. In this, it just went straight down, so there's not a whole lot to dissect here. But realistically, we still have a very solid game plan laid out in front of us that is just waiting. And now all we have to do is wait for the time to strike. Hopefully, again, you find this useful and interesting, and of course, if you have any questions, feel free to shoot me an email or drop them in the comments below. The email is jhb@ssftg.com. And until the next video, enjoy, rest up, and we'll talk to y'all then. Thanks.